Investors are holding back, particularly equities being on the back foot, those who are active preferring bonds. Why is that?
And the major problem now is this: the level of investments from local investors is still weak. The market is mainly dominated by foreign investors, and once there's any little bad news and they exit the market temporarily, then you just begin to see these kinds of price drops. But until local investors, especially the big institutional investors, the PFAs and the rest of them, come back well into the market, we'll continue to see these kinds of ups and downs.
And Jimmy, it doesn't help when the NSC suspends 48 companies for not filing their financials on time. It just doesn't do anything for confidence in the market. Any indication that that situation has been resolved?
And now the important thing is this: the 48 companies who were suspended, I am very sure that, I'm no prophet, but I won't be surprised if next year it happens again. Many of the 48 companies are actually fringe players in the market. The two major companies within that 48, Dangote Flour Mills, who unfortunately were also there last year, and the Nigerian Bottling Company. Nigerian Bottling Company, as we all know, have announced their plans to delist from the Nigerian Stock Exchange, in as much as they'll be increasing investments in Nigeria and expansion plans in Nigeria. For instance, among those 48, there are only two companies there who are within the this day BGL index, and that's just Resort Savings and Loans and Dangote Flour Mills. But the entire companies there probably do not represent up to 10% of the entire market capitalization.
All right, we know that the market last year was offering returns somewhere in the region of 19%, and that wasn't even the best performance. But year to date, the market is not even meeting that particular return figure. What's keeping the market so subdued? Because some company results have been very good. Some companies are paying decent dividends. The banking reforms are almost complete. Why are investors so jittery?
The important thing now is this: where are the funds to invest? Let's not forget that at the boom of the market, most of the money actually came from bank credit. Most of the money came from lots of expansion plans by companies, lots of capital raisings by the banks. There was a lot of capital round tripping. The Nigerian market hasn't had any comfortable primary market offer in the last comfortable primary market offer in the last 2 years, and all these issues need to be resolved before investors just come in. We still have about 700 billion trapped in the private placement, so we need new injections in the capital market, really. Actually, for investors want to invest, but it's actually an issue of cash fund injection. There has to be the fund to invest.
Now we've seen a report. We've seen a report out, Jimmy, today from BMI that's basically bullish about the infrastructure side of things. That, for instance, we're going to see investments around 3 billion this year, 8 billion in year 2015. That provides great opportunity for building materials companies going forward. However, these stocks haven't really done particularly well. There's been bearish sentiment. With so much promise, what do you think is going to happen on the building materials side and the construction side?
Now, I think the important thing is this: value investors recognize this. Right now, every cement plant in Nigeria, every cement company listed on the exchange is involved in one form of expansion or the other. The two investment drivers, the two value drivers for any cement company are capacity and operational efficiency. Capacity in terms of plant size, operational efficiency in Nigeria mainly talks about energy, energy and cost issues, fuel. So every cement plant, CCNN for instance, which is the last cement plant to join this expansion free, has announced 45 billion in expansion. They're also investing up to 2.5 billion in coal, trying to convert coal into energy use. So value investors have to recognize this. The prices are good right now for the building material companies. All of them are investing in to try and increase demand, to try and increase supply so that they can cover the demand-supply gaps. And I just think at the end of the day, it will still turn out well for them.
Okay, and what about the fact that a lot of cement companies are having to slash prices in the midst of this incredible boom? With these capacity issues, they're going to have to do a lot in terms of power generation as well. So the operational costs effectively rise, but the margins might be getting smaller.
Yeah, the margins will get smaller because they were faced with a real threat from the government that, look, if you do not reduce prices, then we would allow importation. So they just looked at it that, do we have to, if we have to, we'll rather bring down prices so that the government keeps offering us the protection, because right now part of the value drivers for the building material companies are the protection the government is offering them. Nigerians are not, companies are not allowed to import cement except they can show the government that they have some substantial investments on ground in building local cement production. So they just have to do this to continue to enjoy the protection.
Right.
And they've looked at it that the protection does offer them some value. So they would rather slash prices than open the market to for cheap Chinese cement imports.
Let's talk about what's going on the banking side, because this is a huge component of the all-share index. Recent sessions show us that the smaller banks, the tier 2 banks, seem to be doing fairly well, and some marginal gains for the rescued banks ahead of the September deadline. What are you expecting to see by way of investor interest in banks?
Now, investors have been, especially the speculative investors, they've been involved in a lot of betting on the R8 banks, the affected banks. Many of the management of the R8 banks as well have been very bullish about meeting the September deadline for recapitalization. Union Bank have said they would, Oceanic Bank have said they would, Fame Bank have said they would. So many investors are betting that they would. And with prices at historical lows for many of these R8 banks, more and more investors are coming in. But of course, every now and then you see the profit taking moving in and prices are coming down. Oceanic Bank faced a good price rally, but right now, in the last 3 days, prices have been coming down. Union Bank faced one day, then it's going up again. So right now, many investors are just trying to make money on these R8 banks, while the value investors are still looking up to GT, First Bank, and the tier 1s and the tier 2 banks, the good tier 2 banks, or the strong ones and the stable ones.